Hello, my name is Raitis and welcome back to another evening commentary and daily breakdown of the markets. We had no positions today opened. We got missed out on a trade, unfortunately, which would have been a winning position running in profits, but no matter the less, quite unfortunate, but we're gonna get going with the weekly outlook and let's see what we can anticipate here on DXY. As we said in the weekly outlook, we traded down up into the daily fair value gap low right here. You can see we're currently rejecting this level. I can outline this one for you. This is daily fair value gap city low, and the market is currently trading off of this level. We anticipated a retracement, and this retracement can go even deeper. Let's see how we do. We have for our bullish market structure, but nonetheless, this is a very, very slow correction to the upside with a lot of just sluggish price action, I must say, right here. And currently we're trading exactly at the daily fair value gap. I said it would be an important level. You can see we traded through it, used it as inversion level to trade lower, and now we're hanging around this level to potentially use it as a discount to trade higher again. So let's see. I mean, we have a lot of price action going down here, but we have also stop run on the highs. So this is basically all a high resistance liquidity run, ran buy side, ran sell side. So very unfortunate market conditions here for DXY. Let's go on the bonds. Bonds have been bullish today. Okay, we traded into the weekly fair value gap. Yeah, 5-year T-note futures as well. Long-term 30-year T-note futures traded down as well and are currently rejecting higher. We saw that stop run. So basically, we're in trapped order flow and we have trapped liquidity, and we are basically trading between the discount and premium array, playing ping pong both sides. We have the IDR model, and basically this means T-bonds should be bullish based on the IDR model that we have. DXY then should be actually selling off. Not good. Because in our team we are short currently euro, but this is a whole different topic. We're going to focus on this channel only on equities right here. I mean, this trade is still going. We're roundabout break even or slight profits as I currently see. But T-note futures are inside a consolidation profile, and it is to expected. I mean, actually, if T-bonds and are inside a consolidation, as I always tell you, dollar can still rally, or it still can rally if T-bonds are inside a consolidation, because this is not a trending market environment. We are consolidating. And euro looks like this. Let's look at the CFDs. Retesting this low right here, trade into 4-hour bullish order block. Close below the BC right here. I like that. Retesting this 50%. Now, if we're bearish, we should trade lower. We have a balanced price range right here. Yeah, so basically looks like a good trade, but we're also at the equilibrium rate, equilibrium of this range. So let's see how the market moves and goes and flows from here, and let's see. So if this retracement offers another swing lower, targets are below this low, then we should be fine on this trade. And GBP USD, you can see, is bullish because Euro GBP is weak, and that's why we choose Euro USD as our leadership market for shorts. You can see I said this in the weekly outlook. This whole manipulation this whole run up is a manipulation in my opinion. Deferring liquidity below the lows, and yeah, we're currently seeing a sell-off. Let's see. I'm just switching through all the time frames to get an idea. So we have the weekly breaker high, currently trading lower from that. So this is multiplication block open. We have the busy consequent encroachment. This will be a very key level to watch out for going into today and tomorrow's trading session. How we trade around that. We definitely should close below this level if we're bearish. This would give me more confirmation for my shorts. And let's get into the equities. Now you can see I already have, this was yesterday's position, which we didn't get, and today we got missed out because I was eyeing today again for NQ to run lower and give us the entry from this 1 hour order block, and today NQ was the leadership asset and didn't retrace so low as I expected to. And this would have been a trade very nice for nearly 3-to-1 risk to reward ratio, but the market failed to trade down by a few ticks. And basically what we did is we referenced, no wait, this is 2 hour. Yeah, so 1 hour time frame, we basically referenced this fair value gap, print perfect entry, and then rallied higher. Yes, I am a little bit selective with my entry point, and I chose the lower entry because, as you can see, if I would have chosen the fair value gap high, market would have only delivered a not even a 1-to-2 risk to reward ratio, which in my opinion is not good. Of course, now I see we have a propulsion block, so market shouldn't trade below this candle low, and this would bring up the risk to reward ratio back to 2.6, which is okay, decent. Better of course is 1-to-3, as I'm always aiming for day trades. In this case, I didn't see that. I didn't see this stop loss placement. My stop loss was below this low because London session saw a run on 1 hour sell stops into a key higher time frame level, which is basically the low of the weekly volume imbalance or the daily volume imbalance right here, which was a new week opening gap. But yeah, what should I say? Missed opportunity. And ES, I didn't want to trade ES because it wasn't the leadership market. You can see as we got the second extension, look how explosive Nasdaq was to the upside, while ES saw a slight run above its high compared to Nasdaq. And if I would have taken ES as an entry, they already had this idea where we had the propulsion block, and excuse if you hear some sounds from the outside. My window's open, but I hope this is not so disturbing. Now we have the propulsion block, and it perfectly trades into that level. We have this 15-minute order block, all the consecutive down close candles. So yes, I could have taken this trade and into this target. We wouldn't gotten the target up into the high. It was a 2.3 risk to reward ratio, also not really optimal. So yeah, today was kind of a slow day. No high impact news release, only medium impact news release. Dow was the weakest pair, and as it didn't even make the run above the high. And I don't want to, for example, trade this. I thought I would maybe trade this retracement one more time again. But again, the rules say if we trade into a higher time frame premium array, we anticipate distribution and run below sell stops. That's why we don't take a trade. This is the rules. These are the rules. And gold is trading in the daily fair value gap. Still, as we mentioned, we can allow that because this is a normal fair value gap, not a busy. And Monday trades lower, we see displacement, but basically for me this is our, again, IDR trading model. Maybe if we get one more time around below the low inside this daily fair value gap, I would really love to play along from here. This is what I probably will be doing and looking for. If we get one more run below the initial dealing range low, then I would look to go long. And let's see what the market conditions provide us with going into the next days. I will quickly show you the economic calendar for the upcoming days. We have not really interested in Australian dollar, but tomorrow we have a 30 AM news release, which is also medium impact. So maybe tomorrow could be really a same day like we saw today. And then Thursday will bring more volatility with the unemployment claim numbers released and GDP. And we have also core price PCE index, which is also high impact news release for the US dollar. And this could bring some volatility back into the markets. And one more low probability filter to not push today is that we had an overextension here on yesterday's candle. So let's see what tomorrow and the other days will do. But for now, we're currently here on the sidelines and scouting for new opportunities. With that said, ladies and gentlemen, I hope let's see how the how the day closes, because I'm doing this weekly commentary quite early today, because I'm gonna hit the gym right now after I close out the session right now. And with that said, have an awesome day and rest of the day, and we will see us tomorrow or in the Discord. Check the link in the description below. It's free. I'll share there my trade ideas live with you, so you can benefit from real-time insights and what I look inside the markets. So stay safe, trade safe, and we will see us tomorrow. Bye bye.